Hello everyone, CB3 here with another live update. It's Monday, July 29th, and we have a lot to talk about. Last week we had the worst market day since 2022, and clients are asking me, does this mean we need to pull it in a little bit, set a little cash on the sideline? My response to that is coming up. Stay with us, CB3 Live begins now. So why am I not concerned about last week's pullback? Well, first of all, it didn't hold. As you know, Friday we had a very strong update. Year to date in CG, we're up 24.6%, GI 12%, DS about 11%. The market has to have a cooling off period every so often, or else it just keeps going up and up and up. And as that happens, there's no one to sell. Okay, when you have nothing but buyers, that's when the high of the market is, because there's no one to sell to. So that's how the market works. And the same thing on the bottom side. When things are just agony in the streets and blood pouring out everywhere, to use Warren Buffett's metaphor, when the very last seller has sold, there's nothing but buyers. And we're not at either extreme right now, but the point being is that there's plenty of upside potential still there in the markets. And so that's why we continue to invest. So here's what I'm looking at this week ahead. So the Federal Reserve's policy meeting is July 30 and 31st. They're widely expected to hold interest rates steady. The range is 5.25 to 5.5. It's been that for many months now. However, I think investors and I certainly are going to be watching Chair Powell's press conference for any hints on the future rate cuts. I do think that there is a possibility there'll be one in September. There's possibly one in November, but that'll be after the election. So it's really the September rate cut that everybody's concerned about or keying in on. But more importantly, this week ahead, we have a colossal string of earnings reports. Microsoft and Alphabet, that would be Google, report on Tuesday. Meta, which would be Facebook, reports on Wednesday. Apple and Amazon report on Thursday. This is a lot of the Magnificent Seven, and of course we will expect that this will affect a lot of volatility for those of you trading the DS program. But again, it's just business as usual. They're going to report earnings. Most of them will probably do well. Some of them might. We will see when the earnings come out how it looks. The jobs report will be this Friday, August 2nd. It's early in the month, but the monthly jobs report is always a big market mover. So economists are expecting about 200,000 jobs and the unemployment rate to hold steady at 4.1%. I think we could see a little bump in that to 4.2, and that would indicate that the Fed's tightening is continuing to work, and that at some point relatively soon, like September, we could expect to see our first rate cut in well over a year. And of course, that's what the market wants to see, and that's what the Biden-Harris administration wants to see, because people remember rate cuts more than they remember rate increases. Certainly the first rate cut would indicate that the Fed's posture is going to start softening, but I don't see that that is a given. It's a possibility, but it's definitely not a given. So other earnings this week: McDonald's, Pfizer, Merck, Boeing, Caterpillar, Exxon, Chevron, all reporting this week. Consumer confidence is reporting on Tuesday. GDP, the final estimate for the second quarter, is on Wednesday, and then ISM manufacturing. So we've got the Bank of Japan, we got the Bank of England, and the Federal Reserve, the U.S. Federal Reserve, all in the news this week. There's a lot going on this week, folks, but it's still just business as usual. All of our programs had a really good last week as far as comparing the benchmark S&P 500 to how CG is doing. We're back almost to 1,000 basis points better in CG. Those of you that have been tracking that this year, every one of our clients has a CG account, and most have a GI and some have a DS. So follow what's going on in my weekly updates so that you know how your portfolios are doing, where the concerns are that I see, and what to watch out for. And then when you watch the monthly show, which is the second Thursday of every month, you'll get more detailed data at that time. But the combination of the Fed's decision, big tech earnings, of course the Mag 7, as I mentioned earlier, jobs data, make this a potential pivotal week, a literal pivotal week as to what's going to happen in the market's direction for the rest of the summer. I think investors, and I'm among them, will be looking for signs of continued economic resilience, meaning the market participants are still willing to buy even in the face of this enormous acrimony in the political climate of the U.S. And now with Hezbollah bombing Israel over the weekend, we're still seeing Middle East angst and challenges over there. And Netanyahu had to cut short his visit here to go back and deal with that. So even with all of these geopolitical anxieties, the market is resilient and continues to hold in there much, much nearer the lifetime highs than anywhere close to the 52-week lows. Okay, so the market's getting ready to open as I finish this. The Dow up 100, S&P up 18, NASDAQ up 120. Market participants expecting we're going to see some positive earnings from the Mag 7 stocks, which I referenced earlier in this podcast. So that's where we are. It is Monday, July 29th. I appreciate you listening. Follow me on Twitter and Facebook and LinkedIn. You'll get my daily updates, and we will be back and see you in a few days.